Good afternoon, friends. This is Professional Accountant in Training and Employment Relationship Associate, Patera TV. My name is Emmanuel. I'm among members of this Patera TV. Today, we are going to give you suggested answer of question asked to the position of accountant of district hospital. The paper we have today contains 3 questions. Question 1 is regarding to IAS 2. Question 2 is regarding to IFRS 5, non-current asset held for sale and discontinued operation. Question 3 is regarding to cash budget. Let's start with question 1. With example, discuss the following statement. Inventory are measured at lower of cost and net realizable value for each separate items in periodic financial statement. If you see the marks of this question, really it is high, means that this question is wide. So in answering this question, you also require to provide more points in order to get these marks. The point we are going to give you is the most important to be included in a question, but is not restricted to include another point if you have it. So the correction of this question, we are going to start. The first, IAS 2 specify the accounting treatment for inventory. The main purpose of this IAS 2 is to set out the accounting treatment for inventories. This IAS 2 define inventory as asset held for sale in ordinary course of business and in the process of production for such sale, and in the form of material or supplies to be consumed in the production process or in rendering service. Really, if we look at this point, it indicates the inventory of finished good, inventory of work in progress, and inventory of raw materials. There is an exception to this International Accounting Standard 2. This IAS 2 does not be applied to the inventory of work in progress arising under construction contract. It is also not applied to financial instruments and biological assets related to agriculture activities. These IAS 2 require the inventory to be measured at lower of cost and net realizable value. I want you to know where these 2 points included in this sentence. Lower of cost and net realizable value. We need to know the cost of inventory. Under this International Accounting Standard 2, the cost of inventory comprises the following: cost of purchase plus conversion cost plus other costs incurred in bringing inventory to their present location and condition. These 2 costs together made inventory cost. Cost of purchase also included purchase price, import duties, transport cost, and handling cost. All these costs bring together made cost of purchase. Conversion cost also include costs that are directly related to the unit of production. For example, direct labor cost, direct expense cost, and worker subcontracted to third parties. If there is point you don't understand, really you are allowed to write in the comment and ask what you don't understand. Really, we are here for you. Net realizable value is estimated selling price less estimated cost of completion and estimated cost necessary to make sales. Try to understand this clearly. In order to get net realizable value, you need to take selling price less estimated cost of completion and estimated cost necessary to make a sale. In the question, they ask us or require us to use an example in order to clearly explain where this IAS2. Particularly hold the variety of items in their inventory, including jewels costing 20,200 francs and flash disk costing 28,200 francs and water costing 15,200 francs. Projected selling price of jewels was 25,100 francs, but it will require 6,100 francs as expected cost to sell. The projected selling price of flash disk was 40,100 francs, but due to accident, flash was damaged and selling price turned to 46,200 francs, and the reparation cost was 5,200 francs and cost to sell of 1,500 francs. The cost of all that particularly projected above was calculated after 1 week of year end without considering the following transaction occurred in that week. Particularly sold the water for 20,200 francs at margin of 20% and also purchased the water at cost of 10,200 francs. You are required to calculate cost of inventory to be included in financial statement of Patera. Pay attention. If you are going to correct this an example, you need to know what is the cost of inventory to be recognized. As this IAS2 stated, we need to take cost of inventory. The cost for jewels was 20,200 francs. Net realizable value, as I said before, is projected selling price minus cost to sell. Here we have 25,200 francs as projected selling price minus 6,200 francs as cost to sell. If you return to the question, really you will see this as required cost to make inventory available for sale. So if you take 25,200 francs minus 6,200 francs, you get 19,200 francs. The cost of inventory should be the lower of cost of jewels and net realizable value of jewels. You need to compare cost of inventory of 20,200 francs and net realizable value of 19,200 francs. Between the two, the lower should be taken. Here, the lower is 19,200 francs, so it should be taken. For second items, flash disk cost was 28,200 francs. Net realizable value, as I said before, is projected selling price minus cost to sell and reparation cost. Remember, in the example provided, flash disk was damaged due to unexpected accident. So here the cost incurred to repair this flash disk required to be subtracted from projected selling price in order to get net realizable value, as I stated in definition of net realizable value. The inventory cost should be the lower of cost of flash disk and net realizable value of flash disk, which is equal to 28,200 francs. It's obtained from comparing cost and net realizable value. As you see here, the cost was 28,200 francs, but net realizable value was 29,500 francs. Really, the cost is lower than net realizable value. So the cost of 28,200 francs should be taken. The inventory cost should be the lower of cost of flash disk and net realizable value, as I said, which is equal to 28,100 francs. For water, remember, we have given the cost of water, which was 15,100 francs, but really this cost was measured after 1 week above year end. The cost of sale, this transaction occurred between end of year and time we calculated this cost of water. Remember, we calculated this cost of water not at the end of year, but after year end. So we need to look the transaction that was occurred in that week. If there is a sales made, we need to add back, but after deduction of profit. Remember, the goods in stock should not include the profit, so the profit should be deducted. That is the reason why the sales made, we have to deduct profit on that sales and add back those goods to the inventory, in inventory. And also there is purchase transaction that occurred. This purchase transaction should be subtracted in order to get the cost of inventory we had at the end of year. Here we take the cost, which was 15,100 francs plus 16,100 francs minus 10,100 francs, which is equal to 21,100 francs. You can ask yourself where we obtain these 16,100 francs. As I said, if there is sales made during that week, should be added back, but after deduction of profit, in order to return back in the stock at cost. Yeah, this is where we get 16,100 francs. So the cost to be recognized in financial statement is summation of cost of juice, flash disk and all, which is equal to this 68,200 francs. So thank you a lot for watching this video. The next session we recover that 2 questions. So thanks a lot.